Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Stock Options Hero. Stock options for beginners. So today we're going to take a look at a 0DTE spread I did on SPX that is going horribly wrong. So, ouch. But we're still up overall on SPX, and this is a new strategy for me. So it's a learning process. I got in at a 95-cent credit. The value of the option went from $2 up to $26. So just to show you how horribly wrong it's gone. And I'm extremely grateful that I have my insurance leg right here. So worst case, I'll lose roughly 400, but hopefully I'll get out around a 90-cent debit. So I'll lose around 5 cents per contract, or roughly $20 if this fills. So this would be like equivalent of scratching the trade. However, SPX is defying gravity today. So it gapped up in the open, and I put on the trade right here, thinking, looking at MACD and stochastic, looks like it was getting ready to turn over. Then it was going well, and then it's just gone parabolic for the rest of the day. Now, we've got roughly 53 minutes in the trading day, so hopefully some profit taking will occur and will force the price lower. And with the theta decay, it continually, let's see, what is the theta? Theta 0. Okay, so no more theta on my options because it's deep in the money. So now the only thing that can save us is the movement of the price of the underlying. So this is a good reason why you should trade small and trade often, keeping your trade size to 1% of your net liquidation. So when a trade goes wrong and you can't roll it, so with the 0 DTE, it's near impossible to roll out the option. So you're either going to take your max gain or your max loss. All right, so I thought I would share this with everyone. So this is the worst trade I've had. Coincidentally, it's a new strategy I'm learning and developing. So I researched it, and the reason for the rally today was Meta, or Facebook, had some big announcements and ran up pretty well today. See how I'll zoom in. Gapped up, it's forming a doji. We are already in Meta. We've got the 250 short call. So we still have a little bit of breathing room, but starting to make me a little nervous. So just goes to show you how quickly the markets can turn. And while I'm bearish on all of these trades, I'm still, looks like I'm down 539 and 1856 on the day, or 539 since opened. So that being said, let's go back to SPX. I would say we might want to take on a slightly bullish stance when putting on positions. If you look, it's higher high, lower high. So looks like it's stair-stepping higher, as well as you can look at the LRC to see the overall trend over the time period. In this case, a 1-year daily. But a 2-year daily, it's in a downward trend. So because the 1-year daily is slightly bullish, why don't we take on a slightly bullish stance when putting on trades? So let's run a scan. And let's load the watch list. Once again, you always want to start with the highest IV stocks, and you work your way down the list. Now, if you're interested, I've posted a video on how to load my layout so that you can easily load the same layout I use. for my videos and this trading strategy. Actually, let's see. So we're in an upward trend. MACD is way oversold. Stochastics oversold. IV's 89. So let's see what kind of strikes we can find for the June 16. So 20 and 15. Upward trend. Yeah. It's just a little unnerving taking a bullish stance when you've been bearish for a while. Looking at the ROC, 39%. So definitely are being compensated for taking on some additional risk. So always look at the short strike for your risk. So we're short the 20 strike. So 22 delta with a 67 prob OTM. If you wanted a higher probability OTM, you could do the 15 and the 10, but there's no money in it. So I feel relatively comfortable selling the 20 and buying the 15. Okay, so risk 1137 to make 450. We've got GTC selected. Send that off. So that is a really pretty setup for a bullish or a bull put spread. I like that. Not liquid enough. If you look at these tiny little candles, that tells me there's not much trading volume. And the options reflect that. There's no money in them either. So okay. So downward trend. I like where the MACD and the stochastic are. I like the IV rank and IV percentile look good. Just see. Yeah, it's too risky. Not enough of a credit to offset the risk on this one, so we'll move on. Okay, I like this one. CAR generally trades in this range. Got the MACD and stochastic looking good. We had a gap up with a bullish candle today. So what about like a 150, 145? Okay, so try to keep it around a 17 delta when possible. That'll get you around the 85 prob OTM. This one's saying 76 prob OTM. Not sure why it's not closer to 85%, but okay, so we can do 2 contracts, risk 840 to make 160. So divide the credit by the buying power effect, 19%. Got GTC, send that off. And the 135 is all the way down here. So quite a bit of cushion. So looks like we got a fill. Feeling decent about that trade. So you really need to be unbiased whether you think the market's going to be bullish or bearish, and simply read the chart, what it's telling you. You can use your experience, but do your best to trade in the moment. So upward trend, MACD stochastic, looks like we're getting a reversal. So I'm hesitant about going short with the market looking like we might be changing to a bullish market. So see, where it's trading at the mean or pretty close, you could consider doing a bear call spread up here and then a bull put spread down here. So let's see. Not really. So we've got 15 and a 10, 25% credit. Okay, above a 10% ROC. And then just looking around, say 25 or 27. Then hold down the control key. Do the 32. So yeah, over 20% ROC. 48 divided by 191, 25%. So basically, this is both a bull call and a bull put and a bear call spread combined to make an iron condor. So we calculate ROC the same. We take our credit, aka max profit, and divide by the buying power effect. Okay, change that to GTC. Risk 957 to make 240. And so the 27 and the 10. So that's the first iron condor I've placed on one of these videos. So just wanted to show you how to do one real quick. So basically a bear call up here and a bull put down here. And as long as the share price stays in between my short legs, I'll capture the full profit or the full credit. Okay, Bloom Energy. It's in an upward trend. MACD is stochastic. Look decent. We are oversold. So can we get like a 14? Nope. 14 and 11. It's only 3 strikes wide, but the 10 is not priced very well for this spread. That's okay. 40 divided by 157, 25%. GTC. Okay, so risk 1102 to make 280. GTC selected. We'll place that one. Okay. Upward trend over the last 12 months. MACD looks good. Stochastic looks good. IV of 60. What can we do at 25? Put spread. So 25 and 20 for June 16. 49-cent credit. So 48 divided by 267, 18% rounding. We'll do 3 contracts. Risk 801 to make 144. And this way, where you have a bunch of bear call spreads on your portfolio and you're putting on bull put spreads, that will help you to be more delta neutral. So that's another strategy you could implement. So this, yeah, I don't like where the stochastic is down here. I'd rather it look like this back here from April 12th. Would have been a more ideal entry, even though we're fairly close in price level. And let's see. Yeah, there's not much in option volume here, so. Okay. So slightly downward, but I like where MACD and stochastic are. I like how we're at the bottom LRC, which you can tell the price really doesn't like hanging near that area. So can we do a 160 bull put? 155. So the 160 has a 76 prob OTM. So we've got 87 divided by 413, 21% ROC. We can do 2 contracts. Send that off. Wait a minute. Back up. I see the downward trend, but if it were like this from March 3rd, I would have definitely put on a trade. But because of the downward trend, we could head lower to the bottom LRC, kind of back here, and even trade through it. See, there was a fake out right here. And yeah, no. Don't like that one. Okay. All right, so BLMN likes to follow these LRCs, namely the turquoise one. So I like where the price is. I like the MACD and the stochastic. About like a 20 strike. Yeah. Not even 10%. So what we could do is bump it up to a 25-cent credit. So that we're getting our 10% ROC. So risk 1,000 to make 125. Now, if it doesn't fill, we'll have to go manually cancel it, which is fine. If I can't get my ROC percentage that I want, then I don't want to fill anyway. I like the upward trend. I like where the MACD and the stochastic are. So what about a 55 or even a 60? Okay, 55 and 50. No. Where we go? 10 strikes wide. So 55. Strike 18 delta, 77 prob OTM. Or above 10% ROC. 2 contracts. Okay. So I skipped the 50 because of the bid ask, where the ask is at 205, and they would turn this into a debit. So I went the 55 and the 45. So my net risk is higher because the width of the strikes is 10. So I'm risking 1,000 minus my credit. Excuse me. Okay, so BTU. I like the upward trend. I like where the price is. I like the MACD and the stochastic. Can we do a 20? No. What if we do... Okay, that would work. So selling the 21, buying the 17. So risk is based off the short strike, 18 delta, prob OTM of 76%. Let's do 5 contracts, GTC, risk 1107 to make 195. So I don't like how it wasn't shy trading between these two LRCs over here. So could very easily drop between like $12 and $11 per share and hang out there. I doubt we could get sufficient credit on a 10 strike. Let's see. 10 and 5. Nope. Didn't think so. Okay, so we're now below IV of 50, and that's generally where I stop putting on trades. Is anything 50 IV and lower? So let's go back real quick to SPX, see if we're gonna get our max loss on this trade. Yep, looks like it. So that's just crazy how strong it's been all day. That is not normal at all. So what if we look at 4 strikes or 4 days till expiration? 17. Actually, no, let's look at the bear call spread. 17. So the 4180 price level is up here. Let's go back to the 1-year daily. 200. Yeah, so let's look at the 4,200, 4,210. Not even 10%. What if we do this? So 4,200, 4,205. No. Okay, so right at 10%. So the 4,195, the 4,200. It's got a 89 prob OTM. Due to the recent volatility, I'm going out as far as I can on the delta so that I can get at least 10% ROC. Oops. So just 2 contracts. So risk 900 to make 100 with a 90% probability of success. Hopefully tomorrow's not as crazy as today was. So I know some of you might think that I'm revenge trading, but I think the rally today wasn't necessarily warranted. And I think we may see some profit taking tomorrow. But the stochastic crossing down here, heading higher, is somewhat concerning. So, we'll see. That's unfortunate that we're going to get max loss on this trade, but very grateful. This is a defined risk trade. Otherwise, it would have been extremely painful. And we would have given up all of our gains over the past 22 days of trading on a single loss. So that's one of the reasons why starting out, you'd want to consider doing defined risk trades. And I know many traders that will only do defined risk unless they're going way out of the money and only collecting like a nickel or a dime on their naked position. So anyway, that's it for today. Hope you learned something. Please like, share, and subscribe. Share in the comments section what trade you are in that you're really liking, or if you want me to do an analysis on any symbol of your choice. Thank you, and happy trading.